Guys, what's up? We had quite the week last week, and it ended with this huge buying spurt on Friday afternoon right before the close. And that's got everybody thinking, hey, the bottom is in, the bottom is in. And that includes my dear old friend Tom Lee, my fellow Korean compatriot. And he's saying that the market's bottom, expects a rebound into the summer. Now, I don't blame him, right? Him and a lot of vloggers and people talking on, Twitter or X and other social media channels are saying the same thing, right? The bottom is in now and we're gonna, shoot to new all-time highs. And that could be the case. But let me show you a couple of things that made me believe that, well, I don't really think so, not yet at least, and something that you should consider as well. Now, first things first, when we see people like Tom Lee come out and say these things, you gotta take it with a grain of salt because he's a perma bull, right? And if you look at what perma bulls do is they always say go to new all-time highs. And, I don't know if some of you, if you've been trading for 20 years or so, then back in the 07-08 crash, Tom Lee came out and said, this was in November, right? Right before the crash. He came out at the end of the year back then and said, look, let's zoom in here a little bit. But he said, look, we're going to, S&P 5090, right? If you remember, the other one was Joseph Abbey Cohen. But basically, these people came out back then and said, we're going to the moon. And, obviously it went down to 666, and, the beast number, which is, less than half of what he was projecting at 5090 back then. And if you had listened to him, well, you would have lost a ton of money. So you just got to keep, these things in check because, when you hear perma bulls, people who are always bullish, say these things, they seem really smart and really right because generally the stock market does go up over the long run, right? Generally, the stock market returns, right? And so perma bulls tend to be right more often than wrong just because the market tends to go up over time, even if it does have these crashes and recessions and pullbacks along the way. And that's why they seem so smart. Whereas, a perma bear is a much more difficult thing because you're fighting against a stock market going up over time, so you don't sound as smart all the time, right? And so you just got to keep that in check, right? He could be right, he could be wrong, but if he hadn't known, he said these things back in 07-08, and if you had listened to him back then, you would have lost a ton of money, right? A ton of money. So just because he's been seemingly right a lot of time, and now he's seeing the bottoms, and you got last year he said that Russell 2000 and small caps would explode, and they didn't, right? They imploded. But he's not the only one, right? You got this other character, Michael Saylor in the Bitcoin world, and this guy is going nuts, right? He's saying sell a kidney. Before he used to say stuff like sell your house and take a mortgage or whatever loans and your life savings and buy Bitcoin. Now he's saying to sell your organs to buy Bitcoin. But I just want to remind everybody that this is the same guy. This guy's been around, right? He in the .com bust, lost over $6 billion in a day. And back then, that's huge money. A lot of people lost money because of this guy, right? He was a hot tech CEO. So again, would you listen to a guy that did this now coming in and saying to sell your kidney? I don't know, but for me, fool me once, okay, fool me twice, who's the idiot? I ain't buying that. And if you look at what's happened to his company, it's gone down 50%. This is a guy who's saying even if Bitcoin goes to $1, he's going to make money. And so I really question. People will talk about how that could happen, but honestly, that to me is a scam sounding thing. If you say it's going to go down to $1 and he's still going to become a multi-trillionaire. No thanks. So with all these people saying that the market has bottomed, we're going to shoot up from here to the new all-time highs, I want to give you the first thing of the book of evidence that I've compiled here of why maybe I don't think so, right? And why I've positioned myself to actually make money if it doesn't. And the first thing is this thing called the Wyckoff Distribution pattern. Now, I've seen very few people talk about this online. I've seen maybe a couple of people in the Bitcoin crypto world talking about how the Bitcoin distribution resembles this, but not too many people. And I don't know why. Maybe it's because they don't know what Wyckoff patterns are, or they haven't seen the pattern materialize themselves. But for me, this is very clearly a Wyckoff distribution pattern. And like I said in my other videos, there's just a few patterns from a technical analysis point of view that really, I tend to give a lot of, close looking at, because they seem to resolve more often than not in the way that they should. One of them being the cup and handle, especially over a long time frame. If you got a cup and handle that's like been developing for many years, like gold did, or even BTC did for months, that's a thing, right? And look, they shot up. The other one is a Wyckoff distribution channel. This one's a little bit more nuanced and more complex, and you don't see it that often, but when I see it, at least, I really pay attention, because these things tend to throw you off, and if you don't follow this, you could get taken for a ride. Now, what is a Wyckoff distribution pattern, which is a topping pattern? Well, it starts off with a BC, which is a buying climax, where everybody is just so euphoric about things always going up and shooting to the moon, so there's fear of missing out, and that just drives prices up and up and up with very few and small corrections along the way, and you get a buying climax, which then, it's climax, right? So it's near the top or the end. After the climax, what happens is you have a period of distribution. This is where the big boys sell to dumb money, the retail traders essentially, and you have a distribution that goes on for some time. And after the buying climax, what you have is a selling thrust followed by an up thrust. But this selling is controlled, right? So it's not, sellers want to sell when prices are high, so they can't just unload everything all in one shot, right? So there's a controlled selling going on, right? And you'll see it in a selling thrust. And when the price reaches a certain level where it's too cheap to sell, they don't want to sell, they stop, and that creates the buy the dip crowd to come in again, and you have what you call an up thrust, right? And once it reaches this price again, sellers, it's a good price to sell and unload to the dumb money again, they start selling, right? And this continues to happen, right? In this range of a good price to unload and distribute. And what happens is, this UTAD, which is the up thrust after distribution, which may or may not happen, but when it does happen, that's an even stronger Wyckoff distribution pattern. What happens is buyers come in again, the Pavlovian trained buy the dip folks, because it's been working, they're making money off it, so you don't blame them, right? And they come in and they actually push prices a little bit even higher than it was when we had that initial upthrust, which pushed prices a little bit higher than the buying climax, these incremental price, these new all-time highs. And what happens is finally this UTAD, ends, and guess what? The sellers come in again and start distributing. Except here, in this last phase, we have the final phase of distribution where they now are unloading for pretty much, there's no more supply to unload, so this is why this is called the last point of supply, and the LPSY is when, the last amount or bucket of tranches that they want to unload at this price is basically just put out to the market. They don't care anymore about the price or keeping prices in here, and that leads to essentially, a pretty steep correction or even a crash. Now, this is a very classic Wyckoff distribution pattern that I just went through with you. And what's going on the daily time frame on the S&P is essentially, if you look at this, we have, right, a Wyckoff distribution pattern. We've had this buying climax, relentless buying with nary, unreal correction. We've had strong corrections, which then lead to an upthrust, a slightly new higher high, which then was distributed, even went down a little bit further. That's why there's two lines here. So we went down a little bit further, right? Which then led to a UTAD, slightly new higher high, slightly new higher high, right? And after that UTAD happens, we had a pretty big LPSY, distribution where they don't care about prices. And so the chances of this materializing, according to a Wyckoff distribution, in my opinion, is kind of high. And we need to monitor this very carefully. So we are currently in this stage here, right? And we went down and we kind of like on Friday afternoon at the end had this big upshoot. And the question here is, everybody's thinking, well, that's the bottom and we're going to go up. Well, if this is a Wyckoff distribution, no, that's not what's going to happen. In fact, what should happen if this continues to play out as a Wyckoff distribution is what we should get are essentially lower highs and lower lows, right, during the LPSY stage. And so that should happen until we just break down and go all the way down. So what I'm looking for here, despite the, fervish, upshoot at Friday afternoon's trading session closed, where we went up quite a bit, is do we make a higher high or not? Because if we do, then I guess that would invalidate the Wyckoff distribution pattern, and I would close that position and start going long. And I'm not going to have any hubris and say like I was wrong, right? This wasn't a Wyckoff distribution, or it was a fake out, and we're going to go up from here and eat that little loss. That's fine, but I'll take that risk, because if it is a Wyckoff distribution pattern, which has been playing out now for many, many, many weeks, we're going to go down quite a bit, and the upside there is huge, right? What we need to look for here is, are we going to make a higher high? And if we do, I'm out. But if we continue to make lower lows, pattern's still in play, which means big downside, big correction not yet ended. And there's more evidence of this, and I'll go through this in the coming charts. What's interesting is, if you look at the S&P back in 2021 rather, in 2022, guess what we had back then? We had a similar Wyckoff distribution pattern that marked the top, and that bear market, well, not really a bear market, I don't consider it, but a down, pretty decent correction back then in 2022. And what happened there? We had the buying climax. We had similar distribution. We eked out a new all-time high. We had a lower high that then led to the decrease. And this is what is going on today as well. So it's kind of interesting. What happened back a couple of years ago that led to that pretty steep correction may be transpiring and happening here as well. So we need to pay a close attention to this. Now, the other thing we keep hearing all the time is, oh my God, everybody's so bearish that it's bullish. And that can happen. I'm not saying that's impossible. In fact, that could be your generic contrarian trade that people like to talk about. And we had quite a big shift from bull to bear sentiment, right? And you see posts like this all over social media, and it's now exceeding the lows of 2009, pretty wild, and it's true, right? It's true. And let me paint the picture. We are here, dude. This is pretty darn high. The only other times we've had this was during the crash of the great financial crisis, right? And the COVID bust. And we're here. So yes, it is true. It is true. And wait a minute. What does that actually mean? One more thing to keep in mind is, while we're so bearish and scared, right? The drawdown is we're only down like low single digits, right? Meaning, like, the market has just really come down just a tiny bit, really. It's not like we've crashed like 20, 30% like in all the other times. We've only gone down a few percentage points, and everybody's like, oh my God, bearish, right? What does that tell you? This is very important. That tells you the market is a glass market. It's got a glass chin. It can't take a hit, right? Small little hit. Oh my God, knockout. Like a boxer with a glass chin, right? Can't take the hits. That tells you the market's really fragile, right? Any tiny thing, market, oh my God, we're dead. That's what's going on. This is a very important thing to keep in mind. Very small drawdown, everybody went super bearish. This market could collapse on a dime, right? We are primed for a crash. It's a crash now or that. I'm not going to be Nostradamus tell you we're going to crash and give you down to the minute when it's going to crash, but I'm going to tell you, market has a glass jaw right now, and it's primed for a trigger that's going to punch it into a crash. Now, this is a very interesting chart you need to keep in mind about this bull, bear sentiment, contrarian way of thinking. Just because we've gotten very bearish and there's a lot of fear in the market doesn't mean we're bottoming, all right? And the reason is, look at these times, right? We actually went into the teens, right? 18, I think, was the lowest. Extreme fear, oh my God, that's so bearish, we're going to bullish go all the way up. But we've gotten here before, right? And look at, so dark blue is the S&P 500. This green line is the extremes of fear, right? We've had this back here, and we went down further. We've had this back here. We had a little correction and went down further, right? A little counter trend rally, and we went down further. Same. Doesn't mean just because it's really, really bearish that it's going to shoot up now. No, there are many cases, right, where it got really bearish and it got even damn more crazy going down right after it got so bearish, right? These are pretty significant downturns after people were so bearish. So just keep that in mind when everybody's saying all these things. No, right? Yeah, it sounds nice because it's contrarian and it's like against what, no, it doesn't happen all that time, right? Don't get like deluded, right? And don't have a one-sided view of history like Tom Lee, like who's apparently always right. No, that one time he was wrong, he would have been wiped out. There's also the index seasonality, and what that means is basically this period is not a good time for the stock market. Like Santa Claus rally, like opposite of Santa Claus rally is around now. Like COVID crash happened around now, right? Things don't go well into March and in about halfway through March, right? And that's shown through here. We have this part down here where in March things tend to go down. And March we'll have the first trading session of March on Monday. We might get a little spike up because funds are buying. But that tends to happen here, right? Beginning of March, funds buy a little bit. But look, it's not over yet. We got to wait a little bit to see if we clear seasonality, right? And if around halfway through March is probably when things kind of line up for really the bottom, at least the intermediate bottom, to happen for maybe we do make a new all-time high, but I don't know, right? Wyckoff distribution pattern. So we may not actually make a new all-time high. And I used to be off the school, like most other bloggers and YouTubers out there saying, correction, then we make all new time high before the real crash happens. Well, I don't know, right? Well, it could, but I'm looking at this Wyckoff distribution pattern, and until we make a new higher high, I'm kind of actually thinking maybe not, right? Prove it to me. Prove it to me by making new higher high, and we go back to that base case of a new all-time high before the real crash happens. But until then, Wyckoff pattern is what I'm looking at. And yeah, you got to prove me wrong there, because it could be that we have a truncated, wave 5 here, and that's all she wrote, right? And that would take all the people who are saying, oh, we're going to make new all-time high out to the shed, right? Because what they were waiting for never materialized, and markets like to do that. Now I'm going to talk about some other, macro points here that are it just seems like we're very near a turning point, right? When looking back at history of major turning points. And one of them is U.S. consumer discretionary spending versus staples, like stuff that, I don't really need to buy versus stuff I need to buy. And, the last time it was up here was the dot-com crash. The other time was up here was the COVID crash. And we're up here again looking like a double top now, right? And with the recession and government cuts happening, which you're going to see in data, because data comes out in a lagging indicator, data at least comes out many months later in employment and all this stuff. I feel like we're going to see lagging data confirm this, right? And if that's the case, this is not a good sign. The whole point of this trading account for mine is to either stay the same, meaning not lose any money, or make some money or a little money while being short and have the hook there. So if the crash does happen, I don't miss it, right? I'm there and I'll write it all the way down. But always to be positioned with a short bias and somehow manage to either not stay even or even make a little bit. And so that's the whole point of this trading account. What I'm doing here is you don't want to miss the big drop. Now, there are other signals that are showing us that we're near a turning point, right? The other one is the bond market, TLT, to the stock market, the SPY or S&P 500. There's a very clear channel here. The last time we chopped the channel was 07, 08. Now, this is from a monetary point of view, right? This fiscal stuff. And we are near the top of this channel as well, right? This ratio is very high right now. And if you look at what's going on, we had the inverted yield curve, which everybody's poo-pooed and saying, oh, that doesn't work anymore. But in fact, it's always worked every single time in history. The one time it didn't work is debatable. But over like many decades, it's worked. And what's interesting here is after the inverted yield curve resolved, there's one more spike and it goes down. And guess what happened? The yield curve actually re-inverted again, right? This is a little bit delayed. We actually re-inverted again, crazily, right? Because the bond market, bonds went through the roof during the most recent market downturn because people are buying, they went to the safety havens. Even like gold went down and Bitcoin went down, right? But bonds went up. And so that caused us to actually re-invert, which is, man, this signal, if we re-invert and go back down, watch out, people, because look at what's going on here. Also in the financial realm, credit spreads, right, is telling us a story here. And you can, credit spreads is the bond market and the loan market, and they are the smarter money than the stock market because they're dealing with loans, right? And this credit spreads, look, this gap can't be detached, as it says, from fundamentals indefinitely. Can't. There's going to have to be a coupling back, right? There's going to be a coupling back. And trust me, this coupling back is going to happen. There's no way it's going to remain like this, especially in the loan market and the credit market like this. No way, right? We are getting nearer and nearer to the event. Then if you look at stock markets in the States, man, it is way, way out of whack with the rest of the world stock. All the money is slushed into the US stock market. We are, in terms of standard deviation levels, way, way beyond what it's been in other kind of like bubbly or big market, correction eras. Nifty 50, the internet bubble. What is going to happen here? You guys, seriously, we are so many standards of deviation off, right? Single standard deviation so high here. It could get higher, it could, right? But let me tell you, there's a mean reversion force, right, that you can't escape. It's like gravity. And when that happens, my goodness, not going to be a good thing. The other thing is the S&P forward PE ratios. We are way so overvalued, building on top driven by this. Now, what happens after when we get overvalued this much? What is the returns? Well, what happens is we don't really have great returns the next decade. That means whatever we saw leading into this, into the last 2 decades or so, since 07, 08, you're not going to get 20% returns no, you're going to get not so great, barely even returns or even negative returns, right? So that means for the long-term investor who's looking at a decade type of time frame, like it's not a good time to be in stocks or to put new money into stocks. Can you guess why people like Warren Buffett have gone into cash? I mean, the signs are all there, folks, and don't try to play Nostradamus and time tops down to the minute or day. Just know that the configuration, it's set up, dude, and you should set yourself up as well to take advantage of this setup, right? Without playing God or Nostradamus, thinking the exact time. You don't need to know the exact time to make a killing. And I'm doing that right now and telling you how I'm doing it. The other thing I saw, which was crazy, was some institution was buying VIX calls, new positions. So this isn't, an option trade. This is somebody coming straight up saying VIX might go 60, 75, $8 million into May, right? Into May. Now, this isn't small people like me doing this, right? What's going on is these are funds buying protection. That's big money like this buying something crazy like the VIX instrument at $8 million. Those are big players like funds and hedge funds buying protection for if the S&P 500 drops out, right? That's what's going on under the scenes, guys. And, if you look at the housing market, we're at all-time records of pending sales crashing. We have a Mexican standoff going on in the housing market. Nobody's selling because prices continue to go up. Mortgage rates are still up. Nobody's got cash to buy, so it's just frozen. We're done, right? Guess what happens after the Mexican standoff? We've seen this before. We've seen it before, right? We've seen it before. We're seeing a maximal version of it right now. Guess what happens? So having said that, let's see what the next week brings. It's quite exciting times, right? We're near something, I feel like. And if you find this kind of content helpful for you, give the video a like and subscribe to the channel. I actually posted on the YouTube channel itself about this Wyckoff Distribution channel midweek, and the people who saw that got this, I guess, preview of what I'm talking about in this video, because I don't make that many videos within a week. It's usually about a video a week. But maybe I'll post more posts on the channel itself so the channel subscribers can get an update and kind of, can position themselves accordingly with the information that I share in between videos. Have a good one. Peace.